Welcome to my YouTube channel. My name is Grande. The unfolding of the stock market crash. I think this is I know I always say this is the closest ever, but boy, we are so close. I thought it was going to happen this week, and I'll show you why. First of all, remember, going back to 2008, you got to remember what happened. After the market crashed in 2008, what did they do? They had to make a decision. Were they going to do a recession or not? It was critical to do a recession like every crash, because what drives your market ever since even before World War I is your growth stocks or your value stocks. And those are your industrial, energy, materials, all the stuff that drive our country. And they want earnings growth. And to have earnings, they do business investment, right? Better earnings you get, the more business investment you get, and then the earnings grow. You get higher multiples, that pushes the stock up. And that's what you do with value stocks. You want to keep pushing up earnings, and you want to keep pushing up yields, okay? Because it thrives on that. But when the crash came, the problem they had was that in the gross value stocks are banks, and they didn't want to break the banks up because half of the banks were insolvent, the other half were solvent, but they had no liquid, and they should have broke them up, but they decided not to because of the politics of it. Because, Bush Jr. was funded by the banks to the White House. Obama was funded by the White, and he was coming in at that point, 2008 and 2009, and he was funded by the banks. And then Hillary Clinton was going to be funded by the banks to run against Trump. So they said, politically, we can't bust these banks up. Well, that causes a problem, because when you take your value stocks that thrive on high yields, and high yields come from what? Growth, right? Growth. And though they said, what are we going to do? Well, let's trick everybody. We'll do what the Japanese did. We'll do quantitative easing, QE. In fact, what's really interesting about it, Bernanke, who said, let's do QE, with the same Bernanke who did a paper when he was assisting Greenspan, and told Greenspan, under no circumstances should you ever do QE. But and for the following reasons. Because the problem with QE is you always, to drive the tech stocks up, you got to drive yields down, just the opposite with growth stocks. But they knew if you drive the yields down enough that everybody buys the tech stocks. And, of course, tech stocks were now, after 2002, were coming into their own, right? So what happened, they decided, okay, we can't go in and clean up the balance sheets and then push to raise yields to push up the value stocks. So we'll do QE, which is a trick. It's a confidence game. What they do is print to buy treasuries to drop the yields, okay, to drop those yields down. And the reason they do that, keep those yields going down and keep them going down, and printing and push it down and push it down. That way you got your tech stocks, which love low yields, unlike the banks, and it would grow. And that's what happened. And that's what drove the whole market. It was all fake, right? Because all they did is keep driving yields down. Then they did the same thing again right here, and they kept printing, and same thing here and here and here and here. And they get finally up to 2018. Now, there's a problem. Yields down here were at 160. And yields stay pretty much from here all the way up to here. They pretty much stayed about that, 160. But when they got to 2018, the market collapsed 20% for two reasons. One is all this printing of money to keep yields down, to push the tech stocks up, creates tremendous inflation. And inflation is a killer. If you go look anywhere, read up on it, all the presidents will tell you over the last 222 years, their biggest fear is inflation because it would destroy economies, it would destroy governments because it's a brutal thing, okay? It'll kill the country, inflation. So when inflation started to really get bad, and all of a sudden yields went to 300 from 160, boom, the market dropped. The market dropped in 2018, okay? And then they dropped the yields. They went and bought an ungodly amount of treasuries to drop yields to 150 to get everybody back into buying tech stocks. And the tech stocks grew again until February 2020. And what happened is the yields went back to 200 from 150. Well, how does it do that? Well, what it does is people in Europe, people over the world, they start dumping their treasuries to buy tech stocks. And when you dump your treasury, it forces yields up. So that's why you go from 160 up to 300, because people keep on dumping their bonds, treasuries, and to buy tech stocks. And every time they do that, yields go up. And that becomes a problem because so much printing of money, soon the economy will not absorb all that inflation. So then finally when the market dropped here, they said, let's buy some treasuries to get the tech stocks going back up again. So they bought an ungodly amount. Look, they dropped from 200 basis points, the yield, to 55. 2020, the market shot right up about 25, 30%. But guess what? No earnings. There was no earnings. You don't need them. And that's the decision they make bad here. You don't need earnings. Banks, you need earnings, right? I mean, you don't need earnings because as long as you keep the printing machine going and keep pushing down the yields, tech stocks will go up based on not earnings, based on yields. And that's why they keep lying. It's a con game. And they keep telling you earnings, earnings, earnings. No, not with this setup in 2008. And here's the proof. How did you go up in 2020, about 30% the market, but you had no earnings at all? And how did you go up in 2021 and you had negative earnings? Yes, negative earnings, okay? All right, I may have flipped them back and forth, but one of these had negative earnings. When we got to 180, okay, inflation's so huge, you saw what happened. God, you got oils up 45, 50%. You got beef up. You got gasoline up. Everything's going up crazy, and that's going to kill the economy, inflation. So at 180, so when they finally got up here at 180, they said, uh-oh, we better switch to bank stocks. Now, let me show you what they did. So the Fed says we better go to bank stocks. And so right here, in December of 2020, they switched to bank stocks. Now, why would they do that? Well, because they knew the economy could no longer absorb all this inflation. So they said, let's go to bank stocks, okay, where they love high yields. So we don't have to worry about printing money to get bond yields down, okay? We don't have to worry about inflation. So yields are going to go up, and we're telling everybody we're going to raise rates anyway, so that'll work out just fine. Anyway, so we started here in the market, and all of a sudden the banks start going up, but something happened. Soon, the banks, when they were going up, no longer would the economy accept the yields, the high yields. So we had this market drop. And then what they did to stop it from dropping, and remember, I told everybody, look, if the market drops below here, then we're going to go down. But I said, I don't want to go down. I want to go back up and form a lower high. Then come down, take out this low. That'll confirm a crash or a large correction. So it worked, right? So what I said came to being. And that wasn't a very, very difficult decision because I knew the yields they couldn't keep yields any longer down because the inflation is so high now with everything going up 40, 50, 60, 80, 90%. You know that the market could not accept any more inflation. So they switched to the bank stocks, and yes, yields would go up, but they told everybody else they're going to raise yields. So they thought, just push the banks up. It'll accept the yields. It'll accept yields, high interest. No, it didn't. Look, the economy would not, and it pulled back. To get the market back up again, what'd they do? They went in, got the plunger team in, and they went in and bought index futures so that they put a new price up here, saying, out in the future, we're going to buy the spiders at 480. Well, everybody stopped shorting. If there's big options coming in and say they're going to pay in the future 480, who would be selling the short? It went up. Next morning, market opened, dropped 500 points. Plunger team came in, did the same thing, bought futures out, and it went back up. And then it went up the next day. And then today, it collapsed again. So it means it's not working. So banks aren't working and tech's not working. So now we got to wait and see what are they going to do to drive this market up. If banks aren't working, tech's not working, what the hell are they going to do? They have one choice. They started to drop yields again because they're thinking of going back to tech stock. That's why they dropped yields. Matter of fact, today, yields went from that 180. We had a high of 180 on yields the other day. You know what it was today? They dropped it below 170 because they're trying to move tech stocks up again. Okay, so, well, let's go back to the tech stocks. Well, guess what? The tech stocks didn't work. And for a good reason. Because they know if you keep on, they can't afford, the economy can't absorb the damn inflation. So that's why now they're in a real mess. So the tech stocks broke, even though the yields, yes, the tech stocks broke down today. Look, the Qs, even though they drove yields from 180 earlier this week down to 168. So that's not working. So banks aren't working because there is too high yields. The economy won't accept high yields with value stocks, and they won't accept inflation, okay, with tech stocks, okay, with growth stocks. They won't accept inflation. So they're not going to accept the banks, and they're not going to accept the tech. So what the hell are they going to accept? We don't know. So stand by. We got to see if the Qs take out this low, it's going to be very serious, okay? If the S&Ps take out this low, look, it dropped today, it's going to be very serious. If they take out the Dow low right here, it could be very serious. But we know right now, this is the real problem, because now it's over for tech. And I always told everybody it's tech that's going to take this market down, and then the problems with China. So let's see what happens next week. So I know it took a little longer, but I wanted to explain to you, because it's really hard to get this in. And I try to keep it 6-7 minutes. Very difficult. A lot of information here. So the bottom line is this, okay? This market right now, okay, they got a real problem because, remember, everything that kept this market going up right up to this point right here was low yields. Buy treasuries, buy treasury, buy treasury, buy treasury. In the meantime, inflation's going nuts. And then finally in 2018, it rejected all this inflation, and the yields went up too high. They went up to around 300. And then from usually 102 to 300. That's why you had this collapse. So they dropped the yields right back down to about 85 to get the yield, to get the market to go back up again. So now they push the market back up, right? And this is to February 2020. Yields hit 190, almost 200. Then it hit 300. And when it hit 300, remember, we went from like an average of, let's say, even 120 to 300, and it collapsed again. So every time it collapses, it's because yields are too high. So they dropped the yields to 55 basis points. Everybody bought tech stocks all the way up here. Now the yields are at 180. But now we're finding out, as I just showed you a minute ago, where they go from here. They're not. The market rejected tech and rejected the bank, so it's rejecting inflation and the inflation and yields. High yields, the economy say I'm rejecting that. inflation, the printing of the money to keep yields down, to keep the tax going. We're rejecting that. So stay tuned. Stay tuned. So the one thing you got to watch right now, as I said, the important thing right now is see what happens in the next few days, okay, and see if we're going to make new lows on these Qs. First of all, this is the big one. Are they going to see how it came down tonight and closed on the low? That's bad news. Are they going to take this out? If they take that out and it breaks, you better be short. We're going to make a lot of money shorting. Same thing with the S&P. Are they going to take this low out? Are they going to take the diamonds out? See, I think the Qs will start to crash. That's what I think. Okay? All right. I'll see you on the charts. Hope you enjoy this. Please join my gang free for 10 days if you're not a gang member. Okay? And please listen to my radio show every day on my YouTube channel. Thank you.